Today, my guest is Vinney Chopra. He's a returning guest and he's an accomplished multifamily syndicator. And today we're going to talk with him about syndication specifically. But before we do, just a real quick reminder, if you like the show, please let us know. You can do this. You can like, you can share, you can comment. And by all means, please consider subscribing to the show. We'd love to have you as one of our subscribers. And also want to let you know that if you care to check out the video version of the show, you can go to the YouTube and check out our channel, Commercial Real Estate Pro Network, and you can see our guest and the show there. So with that, we are now ready to speak with Vinney Chopra. Vinney, how are you doing? And welcome to CREPN Radio.
Oh, thank you. Thank you, Darren. Thank you for inviting me again. It's a pleasure. I totally enjoy coming on your show.
Well, I'm excited to speak with you. And you were, I mean, we've talked here a couple of times, and if you don't mind just taking a couple of seconds and kind of sharing with the listeners, in case they haven't heard the prior episodes, a little bit about your background.
Oh, sure. Darren, I am from India originally. I came here about 40 years back, wow, long time, into the land of opportunities. I'm a mechanical engineer and came here to do my MBA in marketing with $7. I'd still say that. And then I became a broker myself in California. I live near San Francisco in 2004. 2004, I've been a motivational consultant, sales background, marketing, all that, and left my engineering behind. And right about in 2004-5, I got the bug of understanding multifamily, more commercial sector, multifamily than other parts like hospitality or office space or, other kind of things. And then I said, okay, how can I scale this up? We were buying single family homes at that time, but then I got into the multifamily bug and did a lot of training and, learning and going to boot camps and getting coaches and all. And that's who I am. I've done 26 with my teams, 26 syndications, which I'll explain today what they are. And then also we are in the midst of 27th syndication we have done. And we'll talk about all those things so that we could see why that's the route one should look into. And hopefully they can have a great lifestyle at a much faster pace, I think, with this kind of model.
Got it. Well, that's a great introduction to today's topic, syndication. And clearly with 26, now 27 syndications under your belt, you've got enough experience to kind of demystify syndication for our listeners and try and explain, give kind of the nuts and bolts and, what it's all about. So maybe the first place to start is, can you describe just what is syndication for our listeners?
For sure. I would love to. It's kind of like the fact that, if we are putting our own money, Darren, to buy real estate, we don't need other people's money. So syndication is the word. It's a syndicate. You are a sponsor or you are an organizer to get other people's money put together in a limited liability or some other form in a legal structure, which is governed by the SEC ruling. That's the Securities and Exchange Commission, which is a very big watchdog in the United States by the federal government. And then they look after, make sure that you are adhering to all their rules and regulations. So syndication actually is needed if you need extra money to purchase a real estate or any other profitable business. It just doesn't have to be real estate. In my case, it was real estate and it still is. But actually, syndication is where you would like to multiply and you would like to not just purchase smaller apartment buildings or maybe 4-plex and 6-plex or 8-plex, but with syndication, combining the monies of the family, friends, and neighbors and people that you know or don't know. We'll explain all those things also today, how we do it. But the main idea of a syndication is to pool the money together to be able to purchase much larger complexes in apartments or office buildings or anything like that.
Got it. So if I understand right, so basically the syndication is the pooling of unrelated parties kind of thing. They get their
Yep,
money together, and
exactly.
it allows you then to buy larger properties than if you were to go out on your own. Is that?
On your own, exactly, for sure, for sure. And then we can maybe demystify that who are these investors, and how do they come into a legal structure? If you would like me to explain a little bit about that, yeah.
Yeah, please do.
Sure. Like investors are, again, the people who have the means to invest money, of course. And these could be doctors, attorneys, CPAs, regular teacher. I mean, all kinds of retired people, all of them who would like to get better returns. And they can look at the syndicator like me or somebody else, their experience, their track record, what they have accomplished, what their mission statements, what their business plan is, to really vet out the syndicators to invest money before they decide to invest with them. That's the first part. And in the investors, we look at, they are accredited investors, and I will give the definition of that, and non-accredited investors. Now, accredited investors are the ones who have $1 million of net worth, that's total assets minus liabilities, and that does not include their primary residence equity in it. If the primary residence has gone way high and the loan is very low, they got 600,000 or so equity, we cannot count that in that net worth. Of course, in our regular net worth statement, we do count them in, but just for being accredited investor, we cannot count it in, SEC ruling. So that is $1 million net worth. If people have that, they are accredited investors, or they are making $200,000 per year for the last 2 years, and with the similar prospect of making in the future also. That's for one person in the family. But if husband and wife are working, or partner, they're in the same household, then 300,000. In the last 2 years, they should be making. So one of those criteria, if they satisfy, they are accredited investors. If they don't, they are non-accredited investors. And that's where we come into sophisticated, is another word in the syndication world. And sophisticated investors are, they don't have $1 million net worth, or they don't make 200 or 300,000 per year, but they have the knowledge of some sophistication, we call it, of learning. They invest into maybe stock market or mutual funds, and they do know that how investing works. And in real estate, hopefully they have read, or they have gone to some seminars and educated themselves just to kind of look at what's offered to them. And then they are able to make decisions whether they should invest into that real estate offering or not, or any other means of investment. So those are sophisticated. And then, of course, non-sophisticated are the ones who have no knowledge of whatsoever, and they are not accredited, they are not sophisticated, but they are just kind of starting out, and then, they need to be learning about it.
Gotcha. So the accredited and the non-accredited but sophisticated are the potential investors. Is that
correct?
Okay, gotcha. All right. So we've identified the what is a syndication, the why in order to buy larger properties. Now the who. Let's talk about where you go from there. How do you go about raising the money? I mean, now we've identified who we want to get the money from. How do you go about raising the money?
Totally. Again, I think the very best place to start, which we have been doing it for 26 times, I would love to kind of distinguish between two kind of structures, legal structures, and then also share the Regulation D, which is a lot of probably people, audience might have heard about, because we have to do a legal structure and then let the SEC ruling know. We have to register ourselves, but SEC has given, in the layman's term, Regulation D is used for exemption. We call it exemption, Regulation D, which is majority of the REITs and private investors like me, they use it day in, day out to raise millions of dollars. And that's a legal way to do it. We form an LLC, usually limited liability corporation, which is the entity that will own the real estate. That will be the LLC that will fund, we call it, the word fund, the real estate at the closing. And in that LLC would be the investors coming in, sophisticated or accredited investors. We'll talk about that in a second. And then also the sponsor will come in, like myself or other syndicators who are getting the loan approved. It's a single purpose entity, we call it, SP. The LLC is a single purpose entity, need not own any other real estate, only one particular, we call it a specific, property in that LLC. Now, the investors come in as Class A members, if I may say that, and then management comes as Class B members. So A members get their cash flows, or the distributable cash, we call it, at the end of the quarter or at the end of the 6 months and year. Distributable cash is given out to the investors. Class A gets paid first, and then Class B gets paid second, right there. But let's talk about now how to get these investors. There are two distinct regulations, Regulation D, exemption. One is called 506B as a boy, and the other one is 506C as in Charlie. So let's talk about B first. Now, 506B is the one exemption where it's for family and friends. We could do the structure. If we say we are doing an offering of the syndicated package, which contains, of course, I'm saying a lot of these legal words, private placement memorandum is one document, operating agreement is the second document, and then the subscription agreement is the third document, along with the property packet, along with due diligence material, along with the P&Ls and the rent rolls and lots of things, the formation documents, all those are given to the investors to look into if this is the right opportunity for them or not. But that is with the family and friends. The distinction between the two, 506B, is that we can get up to 35 sophisticated investors, up to 35 sophisticated investors into the offering or into the deal, and as many as accredited investors. No limit.
No limit. Yeah, no limit on the accredited.
Yeah, no limit on the accredited investors, but sophisticated should be up to 35. The second one, now, other one in the 506B, we cannot advertise. No advertisement whatsoever. So that is the 506B. But that's why they call it as family and friends, the investors who you have had pre-existing relationships. Now, that is the word which is very, very important to understand, that we need to be knowing these investors. We would have vetted them. We have met with them several times. We have asked them their goals and dreams. We have asked their, if they're accredited, of course, or not accredited. We want to find that out because, they are over $1 million net worth, then they are accredited, and accredited investors are more knowledgeable, and we have less risk to get the accredited investors into our offerings because they understand what's entailed in the real estate or some other form of syndicate. So that is 506B. Now But in the C, the main distinction in the 506C, which we are doing, by the way, is the one we are doing $50 million fund now. It's a 506B with a blind pool, because with the market turning the way it's turning, we would like to have commitments already in the blind pool so that when right opportunity comes, we'll be able to jump at it and then, close the deal quickly.
So wait a minute. Did you say you're doing a blind pool, a B or a C?
C.
Okay.
Actually, I decided to do C in the sense in C, 506C exemption, you can advertise. That's
Gotcha.
the big part about it. You could advertise on Facebook, YouTube, advertisement on the radio, on television, whatever, right? You could send out all kind of literature, which is all factual, literature to the people, and we do not need to have pre-existing relationships at all. But the only stipulation is the investors have to be accredited investors only.
No
So
sophisticated.
they have to be knowledgeable. They have to have over $1 million or making 200 or 300,000, like I explained, right?
Gotcha.
So if we may go back and look at this whole two things, majority, I think I understand like 90% or more, 99, go the 506B route, B as in boy, because a lot of us are starting out, and that's what I was doing it too for 10, 11 years. And we were doing specific offerings. That means we got a property, we underwrote it, and it was off-market deal or like that. We got it under contract. Now we can tell our family and friends who we have already talked to before the deal we got. So
Right.
that's the other part. I would love to tell that to the audience. See, there is a timeline in the whole regulation where when did you get to find the deal and when you are offering. So we need to really talk to the investors way in advance to ask them and meet with them several times to find their suitability. That's the word. Suitability is also very, very important. Suitability is the one word which in my mind, again, I do want to say that I'm not a tax attorney. I'm not CPA or, or anything like that. So all this knowledge, I'm giving what I understand. And I hope, your audience will also kind of take it and, they will use it for entertainment and learning purposes only.
Right. Right. Disclaimer there. That's good.
For sure.
So okay, so we've differentiated between the two types, the most common of the two types of syndications. We've got the B, which is your friends and family, those that you know, and we go with the C. You're limited to accredited investors, but you can tell anybody and everybody what you're doing, right?
Totally.
Gotcha. Okay. So you mentioned multiple pieces to your offering there, and I don't know if it makes sense to speak a little bit about those or what.
I would love to.
Okay.
I think the one document I mentioned earlier was Private Placement Memorandum, PPM, we call it, which is about 67 to 80 page long, very, very sophisticated document, which is legal document to explain the structure, how, whole offering is put together, what's the minimum amounts an investor can put in, how much is the maximum amount, how much is the first minimum amount of raise so that we can break the bank, we call it. We have to raise that minimum for us to even touch it. And what happens if the deal does not go through, then we have to return all the money back to the investors who have deposited or wired the money into the LLC account. So that is the whole, and the use of fund, how the distributions are paid out, how the cash distributions are paid, how the equity distributions are paid, all those things, and what are the fees also of the syndicator like me or other people, what's their acquisition fee, disposition fee, asset management fee, all those things. So that's called private placement memorandum. It kind of tells the investor all the ins and outs and the risks involved in your offering, So that's a pretty big legal document. The second document that goes along with that is the operating agreement of the LLC that is going to be purchasing the real estate. And that is a very, very important document because that outlines everything on the Class A member side, Class B member side, and you are the manager of the LLC, what your responsibilities are, how would it be run if we die,
Right.
all those things. And if somebody sues us, what will happen, legal, all those terms. That's about another 70-page document, operating agreement, which specifies everything. And it also then has in the exhibit Class A members table, all their entities, how their investors came in as level Class A members through IRA or equity trust or Pensco, self-directed accounts, or they came through the trust fund, or they came through the LLC, or they came through their personal, name. All those people, Class A members, are on the title of their LLC on the property. So all of them have legal representation. That's the operating agreement.
Gotcha. So it identifies all of the participants in the LLC, right?
Correct. Also the Class A members and Class B members also, because if you have partners with you who are also helping you to, work with you and so forth, their names are in the Class B side also legally, and they are also on the title. Then the third document, Darren, is the subscription agreement. Now, that is the most important document. Well, all three are important, but the third one, subscription agreement, is the one that really the investors fill out. That is where they let us know each and everything about their sophistication, about their accreditation, if they are natural person in United States, or if they are foreign nationals, then there are some more documents to go with that subscription agreement. And then they also let us know all these, they have to fill these out with their hand or through DocuSign and fill out all this information, how they found out, how did they have the pre-existing relationship with the 506B.
Gotcha.
They have to write it out, all those things, and what they do, what they're, how long they have known the syndicator, all that. And then they also have to say how much they're investing and fill out their legal structure, how they're coming in and all that. And then bad actor form is very, very important there, which is, again, these several terms that come in the subscription agreement. And that is the document which is sent to the syndicator, and they keep it, they look through everything. And if everything is filled out correctly and signed properly, then they send the wire or depositing the fund of their investment into the LLC's account. That's what happens there. And they send a receipt, official receipt, to the investors that their money has been received. And then when we close on the property, they also get a very official documentation to say what portion of the property do they own, percentage of ownership, we call it, and how many shares they own in that particular LLC and so forth.
Gotcha.
Yeah.
Okay. So we've defined what syndication is. We've talked about how or why, how the different syndication models work, whether it be the B or the C.
Mm-hmm.
The who can participate. What about the real estate investor out there that's looking to create a syndication? What words can you speak to them that would kind of give them the encouragement or kind of the track to go from, somebody that's doing their own investing, but recognizes, like you did, that they wanted to go bigger,
Mhm.
They wanted to get in some bigger properties. They recognized that they needed some additional equity. They're going to have to do a capital raise. Can you speak to that investor?
Totally, totally, Darren. That's exactly where we were in the 11 years back when we were working on 109 units and we needed to raise 1.11150. I think that's over $1 million plus extra money for closing and other stuff. So you're right. I think the one thing I wanted to mention to your audience is that syndication is not a big gorilla. It's not a 200-pound gorilla at all. There are syndication attorneys, and I give really lot of weight to my attorneys at that time. Gene Trowbridge, if it's okay if I could say
Yeah.
his name, and Kim Taylor. They worked with me, and they still work with me and my companies to do the offerings for us, and just wonderful people, and they kind of guide you along how to do the whole syndication package, and what to look for and what not to do and what's right and so forth. So just to say, everybody who's listening to me, is that syndication is not a big, not a big gorilla. The main thing is it's a legal structure, which I love it, that SEC rules, the transparency and how we behave, how we get the investors, and how we keep up their interest. Our fiduciary responsibility increases to safeguard their investments, because syndication per se means that if somebody's entrusting and giving me the money and they are not involved on a day-to-day basis in determining the direction of the company to produce profits, that's a syndication. Even two people, if one person gives the money to me and they are out of the picture, it's a syndication. But a lot of time people do joint contracts. They do like tenants in common. That's also another very popular, LLC structure, tenants in common. Darren, in that one, everybody who is in the tenants in common structure have equal say. They all need to participate on a daily basis. Actually, they say active participation is the word in that case, to determine the direction of the output of the profit from that LLC. Could be a business, could be real estate. So that's a very good thing for us to really adhere to the legal structure and what the ramifications are. That's a big thing.
Gotcha. So, I understand there are people that can help you. You mentioned your attorneys. You suggest, don't fear it. There's structure, there's protection and stuff. But let's back up for a second. How is there any kind of a advice you could give to somebody that's looking to begin syndication, as to how to, because maybe they see themselves as, oh, I've never done it before. I don't know if people would know me, trust me. I mean, can you speak to that a little bit? Should they partner with somebody? Should they?
Totally. Definitely, Darren. I would highly, highly recommend those who are starting out. They have the sweat equity, I call it. They have the desire to excel, and go find out, somebody who's been doing syndications, and ask them to mentor them or partnership with them where they could do a lot of legwork and understand all these for the one or two syndications. When they get comfortable, then they can branch out. So it's a very good way to form an LLC yourself and then reach out in the RIA meetings, in some of the, local where they live. They could look at lots of different like-minded person, I call it, at meetup groups, in the RIA real estate investor meetings, or even finding out through their relatives and friends. Many times they could even find in their acquaintances some people who might be doing something like that, and partnership with them and learn the business from ground up. I would highly recommend all those people who aspire to be syndicators to do partnership. Syndication is a team effort. In a single family or one small fourplex, eightplex, you could buy yourself. But in syndication business, it's a team effort. So it's good to reach out. And once you have like-minded person, and that's what happened with me and my partner also. Went through like 9 months to get our first property. It was pretty much up and down, up and down, up and down. But we got the coaching to really show us, to help us prod along. And once we did one syndication, we never looked back. We went second, third, fourth, fifth to 26 of them. Look at that. And in my new company, I did 12 in just 2 years, 10,
Wow.
10 of them in 2 years. So once you get good at it, you know.
Well, I'm guessing that a lot of the what's that, the law of attraction. Once you have demonstrated that you've got the competency, you've got the experience, then investors will seek you out. Have you found that to be true?
That is so true, Darren. I mean, we started with zero investor, right? And the good part was that once we started giving them the returns, quarter after quarter after quarter, they saw walking to the mailbox and picking up. Then people ask other people, right? Colleagues and family and friends. And they said, oh, that's that company, go and talk to them. Talk to Vinney. I was the money raiser all the time in my other company and the new companies also now. And so this way, the track record helps, definitely. That's why the new syndicators will need to kind of partner with somebody and then use their track record to get lifted up. And then after that, it's never easy. It's never easy. I would like to say where I am today, it has taken 10 years, right? But we could do it. I mean, it's all the meeting of the mind, the attitude, the hard work, persistence, all those go in,
Got it. And so you've been doing it now for, you said 10?
Right, about 11 years.
11 years?
Yeah.
All right.
Yeah.
And any plans of stopping?
That's a good point, Darren. I mean, I think I might have mentioned I'll be 66 this year, August 27th. And, the exciting part is that it's given me a new, renewed energy, even after retirement from my public speaking and all. I'm enjoying this really very well. And with our 50 million fund, we should be able to purchase maybe $250 million of more real estate in the years to come. And then we have 12, we are selling 4 out of the 16 syndications now. We have sold 10 already, gone the whole round, starting and ending, disposition and paying the investors back and everything. That helps a lot. But then in the new 12 that we have done in the last 2.5 years, it's got a cycle. Usually we go for 5 to 7 years. Sometimes we sell within 3 years also. If the property has value added and the value has gone higher, we do sell quicker than 5 years, but usually it's 5 to 7 years. So I think I'm good for, and it's good, exciting, I don't have to work, but it's fun that when you don't have to work and you work, that what you enjoy.
Oh, absolutely. Oh, that's great. Well, Vinney, before we wrap this up, is there any closing words you'd like to, or words of encouragement you'd like to impart on the listeners about syndication?
I would love to. I would say that everybody who's listening to me, please do look into it. And, it's not that hard. And I know lots of different information is available on how to syndicate. And I would highly recommend, again, my Kim Taylor's website is really, really good. Kim Lisa Taylor, my syndication attorney, syndicationattorneys.com. That's their website, by the way. If you want to put it in the links there, that's great. My academy is very strong. I have multifamilyacademy.com or Multifamily Syndication Academy, where I teach, what I've learned in the last 10, 11 years and give my templates and lots of great stuff I've developed. My thinking is that if I can teach more people to surpass me or learn syndication, it's the name of the game. You could really get a very fast, lifestyle. Once you do one, then second and third, you're looking at much bigger numbers and your investor base will also increase accordingly. The biggest thing I'd like to mention to your audience is there are several plates. I talk about 5 plates in my blog at vinneychopra.com. That's my another website, VINNEYCHOPRA.com. And there I write a lot of blogs also about syndication, and multifamily. And there I have spinning of 5 plates, actually, how to be a good syndicator. And 2 of the plates, which are very, very important, is the investor plate, because that's where there is money flowing all around us. It's amazing. And if we are able to share with our friends and relatives and family that we are looking for partners who would like to invest as equity partners, not debt partners. So there are a lot of scripts that I provide, which will be helpful. And people like to invest. People like to invest with somebody who knows what they are doing and where they are going in legal structure, and also who has the, who are equity investors. In other words, they are able to get the cash flow plus also the gain when the property goes higher. Not the debt investors, which they only get like 8%. Like we've been giving 18 to 24% IRR per year, in our syndications programs, which is pretty good, and we have track record to prove it. That's from the TEL that we have already sold. We have that. The least we could give was 8.5 per year, but then the most we have given is 18 to 43.3%, per year IRR. So I hope that helps. The big thing is, don't just stay on the sideline, but jump into it. And you will really see some great success, in your scalability, and your even syndication can be done for single family and wholesaling, and in the flipping business too. But multifamily is where I really believe, with the millennials where they are now, they are liking more rental units, and the baby boomers are also downsizing. At apartments have a great prospect, many more years to come.
No, I nod my head to all of those. Those are all great examples, and definitely a nod to syndication and the power of syndication, and why to consider it. Vinney, I want to say thanks again for taking the time to talk today.
Thank you.
Always enjoy it, and learned a lot today, and look forward to our next talk. And just to remind the listeners, Vinney and I have committed to kind of walking through multiple conversations about multifamily. And so if you like this one, be sure to subscribe, and you'll be teed up there, or you'll be notified when the next one comes out as well. For our listeners, if you like the show, please share the show. Share it with somebody you know. Always remember, the more you know, the more you grow. That's all we've got this week. Thanks again for listening to Commercial Real Estate Pro Network's CREPN Radio.